the theory is that Donald Trump comes in, sits down with Putin, and there's a resolution.
If nuclear war actually occurred, exchanges wouldn't exist. You would not be able to get out of your position.
If you hear the alarms and it comes up on your TV, buy stocks, then run for the hills.
Yeah.
Legends. Right, so simple as that. Hello and welcome to The Market Edge. This week we're talking Armageddon, and I don't mean the Bruce Willis film. We'll be looking at how the markets could be affected during nuclear war.
We know it's a little bit doomsday, but hear us out because we think it's important to game out certain scenarios in the event of nuclear war. Will it matter? Won't it matter?
We'll also be looking at oil prices and everything that's packaged up with those. We'll also be looking at the Thanksgiving trades, what moves over Thanksgiving and that festive period.
And this time it doesn't really matter whether you like this video or subscribe, because in the event of nuclear war, none of this matters.
Right. On that cheery note, let's get straight into the meme of the week. David, I'll let you start this one off and describe this one.
Yeah, so it's a picture of a borzoi dog, a dog with a very long nose, and it is talking about the price action when a market starts to really tick up quickly. You know, those rapid green candles.
Huge green candles.
Yeah, that you tend to get in things like crypto. And it's basically like the animal brain turning on saying, oh my God, I need to jump into this.
Yeah,
right
chase.
Like a dog, like a thick dog, basically.
Yeah.
And a dog that just really wants to get long a market. So it's kind of that animalistic brain where really maybe it's better to jump into a market when it's kind of softening a little bit, because you're getting A, a better price if you think it's going up, and B, it's more cost effective because you're not getting slipped on those rapid price increases.
Yeah. So this is obviously quite timely, having seen what's gone on the last few weeks, right? So last few weeks, markets have had an absolute shot in the arm. We've seen huge upside on the back of the election result. Mm-hmm. So everything election, everything Elon Musk, as we spoke about in the last episode, and if you want to check out that last episode where we said, is Elon Musk the most powerful man in the world? Please take a look. But obviously that has seen markets fly to the upside. And we're seeing these huge green candles all over the place. Now, I know what you get. You get in this situation when we're traders and we're saying, you know, when you start hearing people, used to say people down the pub, right? Or people now it's probably people on your WhatsApp groups going, oh, have you been buying into this or buying into that? Because everybody's heard the markets have done great after Trump. This is exactly this situation, right?
Yeah. It's just FOMO of the crowd, basically. And sometimes that crowd can actually lead to severe upside moves. But then sometimes it means that actually that move's getting a bit exhausted and the theme or the narrative is kind of dying. I haven't really seen it yet, though, which is really interesting.
No, that's true. So,
you know, we'll see what happens over the next couple of weeks. But,
yeah.
You know, I think the buying power is still there.
Yeah, I do. But I tend to, one of those situations is when everybody starts talking about it, the intelligent money goes, I'll just take a little bit of profit here. Mm-hmm. And that's why you see these pullbacks, right? Yep. So, I mean, it's this key thing. Retail traders, for a long time, actually, retail traders got quite a bad rap in this situation, because when it used to be the case, when I started back doing this, when retail trading wasn't as big, right? You get this point where you go, well, when the retail traders get in, you know, it's when the intelligent money takes some profit, drops down, retail traders get burnt, and then everyone gets back in, buys a dip, and it goes back higher again. You know, now retail trading is massive. You know, retail traders are pretty much everyone. You know, crypto world, meme coins, everything like, you know, retailers, general public are driving these things, right? Yeah. So it's a bit of a different story, but same thing will happen. You know, market goes higher when we look at traditional assets. Market goes higher. There will eventually, that selling power will drop a little bit, but there's nice buying opportunities.
Well, as you say, though, one of my favourite strategies actually is looking at one of the really big brokers and looking at their aggregated book and seeing the extent to which their book is stretched one way or other. Yeah. And if it's over 70%, then I go completely the other way. Yeah. Because it means that really a lot of guys are going to get stopped out who are considered uninformed traders. Mm-hmm. And so it's quite a nice strategy because it can't be arbitraged away as well, because it's just reliant purely on human behavior. Yeah. Very similar to what some of the big HFT firms are doing these days in the US, where they're buying order flow. they're buying order flow as a process of information, really, to be able to make money as a market maker, sort of a market maker, on all of that flow. So it's a very, very interesting concept to be able to use behavior to your advantage, because at the end of the day, collective behavior can't be arbitraged away. I think that's the advantage.
Things, right? You look at technical analysis in general. Technical analysis, okay, look, there's bots all over the place. There's HFT firms, there's trading strategies and AI within trading for a long time. But fundamentally, technical analysis tends to be the study of a chart. It's a study of a chart, we know that. But study human behavior, because these things are, you're looking at human reactions, Tweet of the week. Now, this guy has tweeted this thing, and it's probably going to break the internet, right? This is David Bell's tweet.
Yeah, I think this is the concept of what I was talking about with regards to gaming out nuclear scenarios in terms of what happens during nuclear war. I think everyone just perceives nuclear war just to be bearish.
Yeah.
But if you're bearish on a market, it kind of supposes that, especially if you're looking to short a market, I'll short the market if there's nuclear war.
Yeah.
Well, that is basically saying that you can expect to actually get out of your position at the end.
Yeah.
In which case, your view on nuclear war is that nuclear war doesn't actually exist, because if nuclear war actually occurred, exchanges wouldn't exist. You would not be able to get out of your position.
Yeah, everyone's running to be with their loved ones. They're not going to stay there to make sure people can execute their trades, right?
Exactly. And so if nuclear war actually were to break out, what you'd want to do is just say, all right, whatever, and just buy stocks. Because if it doesn't then happen, the market is going to absolutely fly because that risk has been averted. And so that's why it's important not to take things in markets at face value.
Yeah.
And it's always good to go a little bit deeper and think, okay, all of these people are screaming and being emotional about this particular outcome. What is it that might actually be averse to that outcome happening? Especially if you have a list of silly people who put a lot of things out on Twitter. I tend to aggregate a lot of views from this specific list that I have, which is about 30 or 40 people.
Yeah.
And I try to come to a consensus as to what they're all thinking, and then just go and do the opposite. Very similar to what I'm talking about with the broker I mentioned and their book that they display. Yeah. Which I'm so happy they still display it, because it's fantastic.
Yeah, absolutely.
But yeah, using that human behavior is really, really important, I think, in trying to understand what silly people are doing.
Let's look at our winners and losers. Now we're going to package these up a little bit. We're a bit more frequent now, so we're gonna package these up to how well we've been doing. Now, last week was Tesla. Pretty much not done anything. No. Which is fine. Which is exactly look. Tesla's a long-term play. Most people are going to be in Tesla for a while, right?
Nothing's done anything last week, though.
No, true. Nothing's done anything last week because the 2 weeks previous, everything's done everything. Yeah. So you're going to get a time when the market's
flattens
chill.
out.
Yeah. So bit of a flat line. I mean, so we're going to see this. This only has upside from my perspective. I think. And then if you look at obviously Starlink, and Starlink, of course, is not Tesla, and SpaceX is not Tesla, but it's the Elon Musk trade. That's the point, right? So we see upside from that.
I think on the Tesla side of things, naturally there's a downside risk. From my perspective, if it starts breaching some moving averages and the trend changes. However, it's also very well supported with interest rate cuts coming as well. It's very, very interest rate sensitive. The biggest risk for Tesla is missing guidance, I would argue, which is if there were, misses on car sales and things like this. However, I think with the relationship that Elon now has with Trump, with the relationship that Tesla as a company, as a trading entity has with interest rates, and also the relationship that Tesla has with the EV narrative globally, I think it's well supported. I would say that, like anything, momentum can increase, especially if people have bought too much, and it can increase to the downside as well as the upside. So, and
we have to remember that at the end of the day, these are stocks, right? And you miss guidance or revenues dip or whatever, market's going to react to that.
Exactly.
Alphabet, Google, like gold the other week, took a bit of a kick in. quite aggressive kick in, to be fair.
This was because of the FTC, I believe.
Yeah, there was this court case against Google Chrome, right?
Yeah.
And it was about what sort of information Google Chrome had to share. And it wasn't the ruling wasn't 2 against Google or 4. It was still a bit up in the air, but it's just the case, right?
It's just risk, that's all.
Yeah.
All you see is with these short-term dislocations, in my view, like a court case, it's like, okay, well, to what extent can other people now start suing or things like this?
Yeah.
That's just what the market will watch for. It's very similar to, I believe it was the CrowdStrike issue, which I don't think is completely resolved yet. But Google's a behemoth, it's just massive.
Who's got the most powerful lawyers there? Well, pretty much you can't really go past the depth of pockets of Google, right?
This is the other thing. When you're talking about Mag 7,
Yeah.
right, a lot of fund managers or ETF managers are going to consider this just to be completely, undervalued now.
Yeah.
Because
by the dips, right?
they'll just look at it like a number. They'll say, oh, yeah, it's trading now not relative to a certain benchmark that they might have in their models. And they just say, all right, well, now the algos have to just start buying them. Or they won't even think about it. The computers will just do it for them.
Yeah, it'll just tick to undervalued, bang, off you go.
You have to imagine the amount of, people who only think in numbers now at these firms. They don't think of narrative.
Like the Matrix.
They don't think of narrative. They could not care about what the actual story is. All they see is past performance. Does it fit within their model? Is their model under or overvalued? Yeah. And then the computers will do the rest of the work.
Okay, so we're going to look at chart of the week, and the chart of the week this week is oil. Let's look at oil prices and how they react once Donald Trump comes into power in January. You've got the very real possibility that the Russia-Ukraine war comes to an end before the end of March because of how we don't know, and there's obviously so many moving parts around that. But the theory is that Donald Trump comes in, sits down with Putin, and there's a resolution. We don't know how, as we say, but oil prices tend to go up during time of conflict. Now, the Russia-Ukraine war is quite different to that, right? Because we know how that affects oil supplies and the situation that we've had from within there. So what sort of movements do we see? How do we expect markets to move? Specifically oil, I suppose, but how do we expect markets to move come that Q1 next year if Donald Trump is going in and flying in like a white angel and saving the world?
Well, I think firstly, there's a couple of event risks that we've can take example from to see how equities firstly move. So before most major events recently, so you've got the election, you've got most FOMC events, you see event risks get overhedged. Yep. So you see, volatility get bid up, especially, so calls being bought on the VIX, which then leads to either a pause or slight decline in the market. But the second that event is cleared, no matter what the actual outcome is, the reversion to normality in the volatility sort of complex means that the market goes straight back up, because if you're short volatility, it tends to mean in the S&P 500 anyway, that the market ticks higher. Now, in terms of oil, if we're looking at the macro backdrop of the US, corporate earnings still strong. Inflation is moderating. The consumer in the US still has extremely low delinquency on their credit. Mortgages outstanding is really, really low relative to income as well. Growth in general is good. So demand is still there in the US. Now, if oil price can decline, now it could mean it's troubling for demand. But the way that I see it is that if the oil price were to decline, it would simply mean that there's more capability for firms to produce. What we would see in the midterm, I think, is the oil price absolutely increase, because it's just suggestive of better demand in the US in the future. But I think in the short term, it'd give a really, really good boost if oil were cheaper. And
of course there is the whole point here that oil, that the US is pretty much self-sufficient on its oil these days, right? So actually from a US perspective and a make America great again Donald Trump stance, not really that bothered. He's just gonna, it doesn't affect the US as much as it affects everybody else from an oil perspective.
Something else that's really interesting as well with regards to the whole petrodollar thing is that China actually issued a dollar bond recently in Riyadh, So in Saudi Arabia, I don't know the amount. It might have been $1 billion or something like that, but it was a hefty enough amount. And it kind of goes to show the extent to which they can't actually escape the dollar.
Yeah.
They're having to issue a dollar bond because it's better to do that than issuing a yuan bond. And so it still just shows how cemented the US is in all kind of credit flowing around the world, trade, that kind of thing. I think it's, I saw as well on Swift, the dollar has again hit the most transactions conducted on the Swift network out of the euro. It doesn't matter. The dollar is just still king.
It makes me laugh because you get all these points every now and again that it's kind of a cyclical discussion. They go, well, it's only a matter of time before the dollar is not the world's reserve company. Absolute rubbish, in my opinion. There's no way that the dollar does it. The only thing that stops the dollar becoming not being the world's reserve currency is Bitcoin. That's the only fear. The only thing that will stop that is going to be a crypto. And it can't do because it's a cryptocurrency, right? So, the dollar is so cemented within everything. You look at everything that we look at from a market perspective, look at from a retail perspective, a retail trader perspective, look at how dominant the Fed is to every market in the world. It's just no getting away from it, surely.
Well, the interesting thing with Bitcoin as well is that it's priced in dollars.
Yeah.
Same as oil.
There you go. Same as everything else. Same as gold. They're priced in other things as well. Obviously, you can go and trade gold, euro, or,
But the most liquidity is in the dollar.
Exactly, yeah. You go and trade it, you won't get in it. And if you do get in it, you won't get out of it. But,
Yeah, exactly. There you go.
Yeah, so from an oil perspective, and from a nuclear war perspective, yes, we're saying nuclear wars can be a good thing for the markets.
For the markets, the perception of...
not necessarily for us, vaporized within seconds.
Yeah, but. The perception of nuclear war and then nuclear war not happening is just event risk increasing, and then it not happening is event risk decreasing, which is absolutely bullish because volatility decreases.
Yeah, simple as that. So if you hear the alarms and it comes up on your TV, buy stocks, then run for the hills.
Yeah.
Come back, you're happy it didn't happen, you've made millions of pounds. Legends. Right, so simple as that. Right, so we're recording in Thanksgiving week, right? Mm-hmm. So we've been looking at, and this kind of rolls a little bit into our picks, right? There's two picks that we want to cover here. One's the FTSE 100. Mm-hmm. Now, you could ask, how does the FTSE 100 and Thanksgiving have any connection whatsoever? Well, guys, David Bell's going to tell you.
You can kind of look historically and see that over the Thanksgiving period, if you buy the close of Thanksgiving on the FTSE, and then you close the position on the US Open the next time it opens up after the Thanksgiving holiday, it tends to have a return of about 50 basis points. So it's not mind-blowing, but at the end of the day, the way that many people might look at that is, okay, I can maybe size up because there's more, I'm not going to say certainty, but this is a strategy that can work over time. It works. It might work only once a year, though, obviously, because of the Thanksgiving holiday.
Yeah.
But then you might be able to go and take an example of that and look at other holidays.
So Donald Trump, if you are watching, if you could just increase the number of Thanksgiving Day holidays, that would be brilliant.
Yeah.
Our second pick is Costco. Now, look at this chart of Costco. It is absolutely flying, and it has been forever.
It's just like, so this is what I think I've said it in a previous episode. There's so many US companies that you just look at them and you're like, how have you done that for so long?
Yeah.
And then you look
this chart was like crazy when we looked at it.
It's just one of those that it's just got such a legacy and it's so important to the entire US.
Yeah.
That it's, you look at it and it's just like, you just keep going up and to the right. And again, it's one of those that's included in the passive index type of world, It's included in all of the ETFs and it remains, top 10 as a company.
Well, you'd slap it in your ETF, wouldn't you? Because it does your numbers amazingly.
Exactly.
Stick Costco in there.
And I think, if you're looking at over the period of when people are going absolutely insane with buying, there could be some outperformance on Costco over this period. There tends to be over the period, as long as they don't.
The reason we're talking Costco is because it's that retailer situation. You're in Thanksgiving these days doesn't just bring Thanksgiving, does it? Thanksgiving brings Black Friday,
Yeah.
Cyber Monday. Now, and it's actually Thanksgiving doesn't bring Black Friday.
Well, I've been getting
November brings Black Friday.
I was going to say I've been getting Black Friday emails since the 1st of November, which is just insane.
Halloween goes, it's then Christmas and Black Friday.
You may as well start Christmas in June these days.
Yeah,
it's getting earlier and earlier.
I'm actually an advocate for that. I would start Christmas in June.
Why?
You know, hate the heat. Anyway, so yeah, Costco, great move, great stock. But it does bring these whole retailers into focus, right? Mm-hmm. Of course, there's so many. There are the reason these places do so well. Look at Amazon, right? I mean, people are cottoning onto this sort of stuff. That actually you'll get flashed up on Amazon that you can now buy this with a number crossed out and this price, even though they've actually never been that price ever before. You know, but still, it doesn't really matter because people get blind to these Black Friday deals and. You know, retailers just clear up.
You know, interestingly, I think Amazon is going to face a really tough period on the retail side. And it's why I think they've pivoted to the AWS computer side so much. Because you can get all exactly the same stuff on Temu and Shein. Yeah. Exactly the same as what's on Amazon. Because most of it is...
You know the crazy thing, right? Sorry to jump in there. The crazy thing about that is that now Amazon is... Because of Temu and Shein, you've got Amazon, who are the more environmentally friendly option, right? Buy Amazon to beat out Temu and Shein because they're killing the environment.
That is sort of this corporatist stuff seeping in. I would argue that people make decisions on buying based off of reviews and the price, rather than whether they think that something is environmentally friendly or not. There are some people that do it, and that's absolutely fine. But generally, I don't think people care. Things are too expensive already.
Do you know what? With Shein, again, within that same thing, I was reading that they put in 1 million new lines of, clothing or whatever. 1 million new lines a month. 1 million new products within a month.
It's insane.
It's just insane. And Temu's potentially worse than that. It's crazy.
It's brilliant.
But yeah, I mean, look. Fundamentally, we're not really talking about crazy trade there, are we? We're saying retailers do well over Christmas and Thanksgiving. Yep. But that Costco chart, it brings me back to when we spoke a few months back about Bank of New York Mellon, nothing to do with the same company, but it was that 52-week high. This is going. Why do we think this is going to go up? Because look at the chart; it's been going up for 5 years solidly, and there is nothing to say it's not going to keep going up.
No, exactly.
So, whether you think nuclear war is good for the markets or not, tell us in the comments. Tell us what you think. Tell us if we're being morbid. Tell us if we're talking rubbish. That's exactly what we want to hear. So, feel free to like and comment. Or if you believe nuclear war's coming, then just don't bother.